Welcome back to Accounting 2. We're into Chapter 13, and we're talking about journalizing payroll. I need you on page 366 in your textbook. We are going to start out by defining accounting terms related to journalizing payroll. We'll identify accounting concepts and practices related to journalizing payroll, analyze payroll transactions, and record our payroll. We're going to deal with recording employer payroll taxes. We're going to prepare selected payroll tax reports, and we're going to pay and record the withholding and the taxes that we've already withheld. So our new terms that we're dealing with is federal unemployment tax, state unemployment tax, and something called a look-back period. So last chapter, 12, we did the calculating of payroll, and we wrote out our payroll checks. Now we have to go backwards and do the journal entry. So Mr. Hoffman did the math for us, wrote the check. Now he's got to go back to his cash payment journal and record the transaction. So we filled out the time cards and got everybody's earnings, moved that over to the payroll register, took that payroll register and went to the employee's earnings record to figure out if people were married or single, what was their withholding allowance, did they have anything else coming out, paying for health insurance, or even above our pay grade, 401k, 403bs, flex medical, flex daycare, stuff like that. So we figured that all out on the payroll register. And this is what we looked at last chapter, right? Every single person had their earnings, their taxes, and their paycheck all figured out. We picked them up one by one because then, again, this is all of our employees for one pay period. Picked it up, drug it over, and dropped it individually on the employee's earnings record. And then Mr. Hoffman wrote a $4,600 check from the regular checkbook to the payroll checkbook. We then wrote individual payroll checks, paid everybody, they're happy, and they move on to the next week. Okay. We now got to go back and turn this last line of our payroll register into a journal entry. So you jump forward to page 370. We have two new accounts, right? Two words we're going to kind of trade off from what they were. Our first one here is salary expense. This is the total cost of us running our people, paying our people for this pay period. This $5,700, this salary expense, matches up with our total earnings number. Right? We got to come up with $5,700 to make our people work for us. They're only going to get $4,600, but we got to come up with $5,700. Where's the other $1,100 going? Well, there are all these taxes that I, as a business owner, have to withhold. I hold on to them. I then eventually send them off to the government. The other new idea, not really, cash, obviously cash credit, and we talked about that earlier. Hoffman had to use this net pay number here to write our check. Right? So we wrote out a $4,600 check from the general checkbook to the payroll. So here's what our journal entry looks like, old school accounting 1, chapter 2, T accounting it up. One debit of salary expense, which adds up to all of these taxes payables, and a credit to cash because we're writing out a check. Jump forward to page 371. Here's what our journal entry looks like. So we're going to start out paying cash for semi-monthly payroll, writing out a check for $4,600. Here's what our journal entry starts with. We write the date, per normal. We're going to write down the account that's going to get the debit. Well, that's going to be salary expense. We write out the check number that's given in the instructions. We'll write out the account that gets debited, $5,700. And again, this is total earnings from my payroll register. I'm going to write out the total amount getting paid. That's, again, my net pay from my payroll register, my total of net pay. Then I'm going to write out all of my different accounts that get my credits or my small taxes payables, and then write out my amounts. As you look at page 371, you see the transaction where it says paid cash for semi-monthly payroll. That's this transaction here. We're going to go ahead and take a break and move on and do 13.1, work together as a group.